Good evening, good evening. I got a good one for you today. I have a lot for you. It is. I have I did a little study on trend following and timing trend following. Okay, so that's what I did in this video, and I'll show you. First and foremost, I have to say what trend following is a little bit, and if you haven't known, trend following is an alternative investment. It's a small niche group of traders that they're called the turtle traders. They have their way of thinking, and it's trend following. They think in trends. And I've listened to a lot of it. I've read books, because they dominate the commodity trading advisory space, which is what I want to do. So CTA, to be a CTA, a lot of people are trend followers. Okay. Basically, in an essence, what they do is they try to catch trends. And I'll show you an example. This is an article by Michael Melisinos. He is founder. He manages the fund Melisinos Trading. He has a fund. He has a CTA and a hedge fund doing this. Okay, doing exactly this. He also has a podcast that I listen to. So Mike Melisinos. Anyways, and I want to show you some charts that trend followers win, trend followers lose, trend followers win. You can see he posts some charts here that when it's trending, the market's trending, and keep in mind this is a 1 week chart. This is very big picture stuff. And in this video, I tested some big picture stuff. I've never been ever looking at the higher time frames like this. I've tested 10 years back, and I'll show you. I'll get to that. But I'm basically developing a system that is a trend following system, but I'm not going to do it like them. I'm going to time it. Okay, I'd like to time it instead of always trend. And that's the big deal, because if you look at these charts that he posts, it trends, it doesn't trend. It trends, it doesn't trend. It doesn't trend, trends. Doesn't trend, trends. There's period of whipsawing, not trending. There's periods of sideways. There's periods of movement. There's periods of sideways, periods of movement. And it's like, it's not necessarily stepping or breathing. It's not that repeatable, but it is true that the market does go sideways for times, and then it does trend for times. And the trend followers make money on the trends. That's something that's guaranteed. But if you look at their track record and you look at their monthly returns, their drawdown is severe. Okay, no one wants to go through their drawdown. That's the Achilles heel. Whenever investors try to invest in CTAs, just look at Autumn Gold. Just look at all the CTAs listed. Just look at their drawdowns, and they have to post the results. And you'll see that it's pretty bad. I mean, you can get 20% down in a year, 40% down in a year, and then up 40 to 60%, on the good years. Okay. And they are not, in the past 10 years, they are not beating buy and hold S&P 500. Okay. So, that is a big deal, because we can suffer drawdown as long as we're making huge money, and they're not. You're just getting a lot of drawdown for not that much reward. So I'm not promoting trend following. I'm saying that I think what would optimize trend following is to time this thing out in a big streak of red, maybe start trending. So let's take a look. That's what trend following is. Let's take a look at what I have. First and foremost, second and not foremost, where am I? Okay, so I did two tests, okay? I did a daily chart, and then I did a 60-minute. Briefly, let me go over what it looks like. Let's go to a daily chart. Let's go to nat gas. You can go to, I was going to do crude oil. That's fine too. because I haven't tested that one yet. Quick. And I did 10 years back, okay? 10 years of data, whether it's the 60-minute chart or the daily. I tried them both, the exact same parameters on both of them. So I want to show you what I mean by trend following quick. And I didn't tweak the code, and I tested various symbols, meaning I did not change the code per symbol. It's the same idea, the same premise, the same everything. Which is powerful. It's a good thing because that means it's generalized and not specialized. So it's $10 a tick is crude oil. So let's take a gander at what's going on. So this is what trend following is, okay? What it means to me. Okay? We see market goes up, we go up with it. Goes down, we go down with it. We trail our stop, we go long. We were long down here from 2020. Remember, this is a daily chart now. I have never tested this higher time frame. This is a higher time frame idea. Okay, we're trending big moves, and we're rolling the contract over because futures is quarterly. A lot of them are quarterly contracts, and you just roll it to the next time. You just roll it. This one we held from 2020 long crude oil when it bottomed there and about $5. We did not stop. We kept on holding that, holding until just now, where it got out. Just now where it went up and then got out at $85. So if you look at the results, I mean, this is phenomenal results. In 5 trades, you made $140,000. Yes, it took 10 years, but this is investing, my friend. This is investing. Okay, so let's take a look at the trade list. I'm just going to document that quick. Just because I need to put the trades in. I forgot to test crude oil. By the way, in this study, I did 10 grand a trade. Okay, 10 grand risk per trade. Every single symbol. So it's not like, that NASDAQ moves more, so NASDAQ's going to be weighted more or less or whatever. It's not like that at all. They're all the same. They're all apples to apples here. I'll just leave that one. Okay. So there you go. That is the system, okay? And by the way, the system is just, it goes up in a direction away from the average price, the red line, and we do not trail our stop until it goes really far away, and then we start trailing our stop to the 66% retracement. So if you do like this all the way up, we're going to let it come down from the high all the way down to 33. Here would be my stop, 66% retracement, but it didn't. It kept on going up, okay? And then when it gets to a certain extreme, when it gets so extreme, we start getting out, and we, instead of 66% trail stop, our 33% trail stop. So our stop is tighter when it goes extreme. So we're saying, all right, I'm gonna get out of this trade. I've already made more than 10 R at the very least. It's a tremendous amount what can happen. So now I want to show you, that's kind of the introduction, okay? That's the introduction. Now is the data. Now we get to the data part of it. This is the daily. You make $694,000 in 10 years. Look, I just handpicked these symbols. I did not do anything else. I just picked these symbols because these are the most popular futures symbols there are. And this is a system that is not edited. It's across all the board here. We're generalizing these things. Commissions doesn't freaking matter because you're trading 108 times in the entire 10 years across all these symbols. But that's not really true because you do have to roll each contract, and that's an in and out. That's true. But $3, buddy. I mean, commissions is not going to be more than 10 grand. So it's not. So whatever, 684,000. Big whoop. That's not a big difference here. So anyways, so that's the profit. Seriously good profit. The only loss I had was copper. We lost money. In 10 years, we lost money on copper. Nat gas, we lost money on. Gold and silver were unbelievable warriors for us. I can tell you right now, silver, look at silver. For years, each box here is a trade. And each trade can last 3 months, a month if it's a quick loss. It can last 5 years if it's a serious win. This last win right here lasted, I think, 2021. You can look at silver. I mean, I just want to show you silver just so you can get the idea what this is. This is investing. This is straight up investing. I would say it's a great method of investing because it's up or down. It doesn't matter. We capture the ES longs. We capture the market going up because it's on our radar. It's going up. I'm in that. So it's the trend. It's all trend. And I do appreciate that trend following idea. I do like that, but I wouldn't do it just like them, to be honest. I don't think we should trend all the time. But anyways, this is trending all the time, by the way. I'm just showing you this. But we're long since 2020. Silver long since 2020. We didn't get out until quite recently when that big down day happened. That did get us out. But holy crap, you can see the performance. We're losing $100,000 in 12 trades and then only to win $325,000 in one trade. That's taken over 5 years. So if we were actually managing this as professionals, we would be rolling silver long for literally 5 years of our life. And we're making money that entire time there. And just, that's one trade. This is long term, bro. I cannot stress that enough. But that is pretty amazing that it looks like you make money doing that, okay? It just does. It just does. 10 years of time there. Since 2016. Yeah, 2016. All right. So now I took this same idea, the same exact moving averages, same exact idea, same exact preferences in terms of the trail stop, everything. Everything's the exact same. And I just switched it to a 60-minute chart. And the 60-minute chart took 10 years back as well. Obviously, we're going to have a lot more trades if we're taking 60-minute chart instead of a daily. What did we get? We got $3.7 million profit. And because it was a 60-minute chart, we're taking more trades. I did include commissions, $3 in, $3 out per contract. That's more than I pay in commissions. This is as accurate as we can. I did not include slippage, however, so that, I mean, we could be off by a little bit. I don't know. But I did include commissions. So we take 2,100 trades across all these symbols across a decade. That's actually not that much. We make 3.7 mil. It looks really good. Did we lose anything? Yeah, we lost $500,000 in copper. Dude, if we did not trade copper, if we say, all right, let's take copper out, we would be making a lot more. Corn, we lost $384,000. That's not good. Crude oil, NASDAQ, ES both made upwards of $600,000. Gold makes $600,000. And you can see how this is what I like. You know how darts, one goes bullseye, one goes way out. One goes way out. One goes way, close, and they're all scattered. That's not what you're looking for. When you're shooting, when you're sniping, when you're darting, you want them near each other. You want them near each other. I don't know what that's called, clustering, or it's just accuracy. I would rather take someone near each other than someone sporadic. So you want something near each other, and I say $10,000 risk per trade, and in 10 years they all land nearby each other, whether it's gold, whether it's the stock market, whether it's crude oil, with all of them, all of them are very different charts. Very different charts, except NASDAQ and ES. Those are similar. But still, they all land about the same. Pretty remarkable. Silver made 832 grand. Silver was really good. Nat gas made $500,000. Bean oil. I did have to choose an agriculture with corn. Bean oil made $600,000. Very, very, very profitable. So now we get to the point of this is trending all the time. Why don't you just do this? It sounds great. Why don't you just do this? You could. You honestly could. I don't see anything wrong with it, actually. It costs a lot of money to do it, but I mean, this is when portfolio management, if you have enough money to be able to spread amongst these symbols, yeah, go ahead. I think this is a great idea because you catch silver long. You catch all these things. And on 60-minute chart, I'll show you silver as well because you're holding since 2020. On the 60-minute chart, you're not holding since 2020, my friend. You're not holding since 2020. You're holding them. I'll show you the longs that happened. We did catch something, obviously. So here it is. You can see that this is 2025. You've taken a lot of trades. Look at this one. Massive long here. Massive long since 2025, April of 2025. April of last year, we went long, captured a massive victory. Then it went sideways and it chopped us. Every red you see is minus 10 grand. We're taking 10 grand losses every one of these chop sessions, only for it to go upwards. Oh, we get stopped out again. But then, bam, you capture a big win, big trending period, which takes us back to that chart here where you make money on the trends. This is a trend following system. Now, what I want to do here, because it's a 60-minute chart, because we get more frequency of trades, I want to have losses before I start trading trends. Okay, I want this consolidation. This is what I want. The consolidation is a trigger for me. Like, oh, now I can start. After you lose $50,000 to $100,000, I'm gonna start trading now, and I'll risk 10 grand a pop, just like the system does. But I'm giving it a head start. I'm getting a coupon on this a little bit. And I think that is the way to do it. So let's take a look at what that does. All right. So now we make $3.7 million trending all the time. All these symbols always trending. Okay. Always. All right. And the drawdowns do happen. When you're going for high risk rewards, they do happen. That's what happens. You get drawdown. That's why you need to diversify amongst the symbols. I don't mind that idea. It's actually a really good idea mathematically because you're looking for these big outlier, big trades for us, and you might as well spread it out a little bit amongst different symbols. But anyways, I want to show you the average amount of losses before a win. See all this red here? Each box is a trade. Dude, NASDAQ lost 19 trades before it won. It lost 10 trades before it won the big one, which is 384 grand in one trade. Yes, because these huge moves and trends happen, especially on the stock market. I mean, if you bought April bottom, which this does, I'll show you. This thing does buy April bottom. And on the ES, I believe, I could be wrong, but I'm pretty sure it just buys the ES bottom and holds it. Literally. What an idea, dude. We just buy and hold, are you saying? Yeah. Dude. Really? Buy and hold? Well, this is this type of buy and hold. Yes, it just got out. You can see on the chart. You can see on the chart there, it just got out of a trade. We can see when we entered that trade. A long time ago. I think it was in April. Yeah, we bought the April bottom. This was where we bought. and we held it for a very, 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 very long time, all the way up to current price. All the way up to current price, which finally the market rounded down and stopped us out. It just stopped us out because the market's been going down. I'm going to show you how much money we made on that one trade. On that one trade, we made $142,000. So yeah, we lose 10 grand a pop, but when we make wins, I mean, there's no cap to how much we can win. So that's what happens. So you see on the board here that there's a lot of green and reds, and the reds are losses. So there's always seems to be reds between these greens. Not always, but a lot of times. And I'm thinking that maybe we can allow there to be, let's say, 5 reds before we start trending, before we start doing these trades. And let's go ahead and look at that. So remember, the average amount of losses before a win is 5.1. The median, how many losses before a win, how many reds before a green, the median amongst all the symbols is 4. So 4 of them. So you can say, all right, let's just start trading after it's done the median red, after it's lost that many in a row. We can start trending this thing. So let's go ahead and do that. So right now we make 3.7 mil, which is right here. We make 3.7 mil and that's rounds about to $1,700 a trade average profit. So let's go to greater than or equal to, let's say 5. So that means it's gone 4 losses before 1 win. And we make 2.7 million. We drop $1 million, but we drop 33% of our profit. However, we drop more than double our trades, more than 50% of our trades. So we cut 50% of our trades with only cutting a third of our profit. So you can see our profit per trade goes up from 1 point whatever to 2.6K. So we're getting more accurate. Is it the best choice? I'm not sure. Let's go 6. You're still dropping your money. Every time you go up, every time you cut trades, you're dropping your profit from, it was at 3.7 with no filters. Well, now it's 2.5, but we've doubled our profit per trade. And if you look at the graph, if you do this, and if you look at the graph of our equity curve, which is our account value, when you have more average profit per trade, you're likely to have less severe drawdowns. So when we do 3.7 mil, 3.7 mil, let's just look at the graph. Let's go ahead and look at that graph. This will be the last exercise here. Okay. This will be the last exercise, and I'll be done. I'll show you what the graph looks like with all the symbols combined. Now, I'll be honest, I didn't make them chronological order, so this is going to be inaccurate. This is just symbol to symbol, but this still might give at least a line chart. Okay. So like, this is not in chronological order, okay? This is like silver, gold, copper, or copper is probably the down one, nat gas, like all of them are in their own chronological order, but whatever. You can see that this graph, this is what it looks like. And now I want to show you the graph if we take a coupon on it. We let it lose for 5 trades before we start trending this thing. Let's see if we can find a way to do this. Greater than or equal to 5 is fine. No, I want to do 6. greater than or equal to the 6th trade. So that means we let 5 losers happen. Yeah. So let's go ahead and look at this. It might look different. I don't know. Oh, you want to do it on the same graph? I don't think so. I'm down to do the same scaling, but I'm not down to do the same graph. Because there's different trade count. I don't know how that would look. I mean, I'll give it a go if you want. I'll give it a go. All right. Here we go. I'm going to do it on the same graph. Just give it a go. Like, we'll see. We'll freaking see, dude. No, I don't think it'll work. But anyways, I want to show you side by side here. That is the graph. Here we go. All right. Here we go. So the graph on the left is all the trades, all of them. The graph on the right is only trading after it loses some before we start trading. You can see it's very comparable, actually. The scaling's not the same, but I mean, it doesn't look anything different, really. I just want to go maximum here is 450,000. Dude, what's going on here? Whatever, dude. I don't know. I don't see actually much difference in the graph, but we make more money per trade. That's all I can say. Honestly, the left graph looks like maybe less drawdown, but the scaling's different, and I just mess with the scaling and it won't freaking let me. So, I mean, this scaling thing sucks, dude. But anyways, that's what you can see. I mean, we can look at the max drawdown. You can see, I mean, from 324 grand. I mean, you can't because it's not in chronological order. Sorry. I'm not going to do drawdown like that. But anyways, it's better to trade after it's lost some, in my opinion. But we'll see. I mean, we can look at doing even more than that if you wanted to. If you wanted to say like, oh, let's wait until it loses 10 times in a row. You still make $1.5 million. Your average money on each one of your trades is $5,000 instead of 1.7 grand. So you have huge accuracy increase if you say like less than, or the 10 or more. Like you can see this. You can see that one improves greatly. Okay. That one improves greatly. And now let's take a look at that graph. After it loses 10 times in a row, then we start trading. I just love this idea. I freaking love this idea. It's so more accurate, dude. I'm telling you right now. You start trading it, dude, they've already lost 10 times. Like the market's already squashed itself 10 times. You start trending now. It's very rare that it goes 10 times. Like I said, on average, it goes about 5 losses before a win. On median, it's 4. Those are very similar. So it's it's unlikely to go 10 losses in a row. And if it does, we're so much more inclined to be able to win in trend following after that's happened. That's what this looks like. And that's why you can capture some serious gains. Yeah, you're risking 10 grand a trade, but we're more accurate if we do this. You can risk 20 grand a trade and you're going to make way more money. So, Yeah, you make half as much, I think 1.5 mil doing that. But man, you take 300 trades instead of 2,000. So clearly it's more accurate, and that's why you see this number, $5,000 per trade. So in general, do I want to trend all the time? The trend following group is growing on me for sure. The trend following group is growing on me, but I don't feel comfortable just trending all the time because I just don't think that's optimal. I'd rather have it mean revert for a while before we start trending, and that's what this system would do. This is something I would roll out. I would want to roll this out into like an investing program type thing, on various symbols. It doesn't matter. Like crude oil is trending right now. You can see crude oil is acting up. Well, corn might not be. Bean oil might not be. Nat gas might not be. Copper might not be. So these greens offset each other. And that's why you need diversification. How much money would it cost to actually trade this system? Well, I can tell you right now, 10 grand is the minimum risk per trade. Okay. The zones are big. Sometimes they're big when the volatility is big. So you need at least 10 grand risk per trade across each symbol. I don't even know how much that would be. That would be a lot of money. To make this money, to actually do this system, you'd need a shit ton of money, dude. I don't know. I would say it depends on how many contracts are being used for each of them concurrently. I would say you'd need $1 million. Yeah, not gonna lie. But this is a very cool system. I think it's sophisticated, but who knows, man. So that's what I'm looking at. I just think that trend following is very interesting. I think the trend followers are too far. People are right and left, moderate. These guys are way fucking far on their extreme trend following all the time. They think in trends. You should hear them talk. They changed their lives to be matching their investment philosophy. And I don't mind that. I don't mind going all in on stuff. I'm an all in type of guy. I just don't agree with their all in. I don't agree. You should not trend all the time. You should wait until it's time to trend. Don't you think? A trend follower guy, don't you think? Look at your results. Do we really need to go here? Do we really need to look at the results quick? Chesapeake Capital got taken off. He doesn't want to show his portfolio anymore, but Melissanos is still doing it. These are all not everyone's a trend follower, but this one's systematic trend, diversified, exactly what I was talking about. He's killing it this year, but you can see the graph. There's periods of severe mean reversion. There is, rate of return last year was down 28%. You're up 30% this year. You made it right back. But the drawdown, you were down 50% last year. The year before that, at one point you were down 24%. You finished 9% up. The volatility is there, but the reward is not always there. And you can see over time, this is from 2016 is here. 1300 is VAMI. You didn't make much more than you started with. And this is just one trend follower guy, but anyways, you shouldn't just trend all the time, dude. I don't mind it. I don't mind the idea, but we should optimize that a little bit. That's all I'm saying. So, yeah. So I know that was a long one. I really appreciate you listening. That is what I'm thinking. Yeah. It's a very cool idea to have a long-term system. Very cool idea. Investing, very cool idea. Slow, Very cool. I think I would reside right here in the 60-minute category where we can time trend following a little bit more. Using the daily chart, using these huge, humongous trades. Yes, you don't trade much. Yes, you almost always find a big win. Eventually the market moves enough to get you a massive victory. In silver, you had to wait about 5-6 years, lost 120 grand before you went long, and you make 312 or 320, whatever. Like, it just waits a long time. So, but trends happen. That's one thing that we can tell from both the intraday not intraday, but like smaller time frame. I would call this intermediate time frame, and the bigger time frame. Trends do occur. Price moves, bro. Price does not always stay stagnant. Price does move. Price can move to price level to another entire level and does not come back sometimes. And that's fundamentals driving it. I don't know what's driving it, but price does move. So we can take advantage of those movements. So very interesting. Very interesting. Yep, that's all I have. Thank you for watching, mate. Thank you. All right, see you, mate. See you.